Investors and traders, welcome to the channel. Market chart pattern. Today is 19th of May 2024. I hope everyone is having a great weekend. In this video, we will be taking a look at quite a few things. We will be taking a look at the US dollar. We'll take a look at the bond markets, the foreign markets, including the Chinese market. And then we'll actually also take a look at the sectors. So we'll start by taking a brief look at the banking sector, XLF. We have already done a video about it, so I would actually recommend to watch that video, but there's one key difference that I wanted to point out. We'll take a look at the HGX, which is the housing ETF, and then XLY, which is the consumer discretionary, and the Dow Jones transporters, and finally semiconductors. And then we'll move on and take a deeper look into the US stock indices. So this video is going to be full of a lot of information, action-packed video. As always, this video is for educational purposes only, and it is not a financial advice. And today's video, I would actually like to start by making a quote by Sir John Templeton. So it's a really wonderful quote, and you know, if you are an investor who has been in the markets for quite some time, you would have known the name of Sir John. So what he says is so true. Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. So the question is, in May of 2024, where are we? So that is something which we'll try to decipher in today's video. And we'll start by taking a look at the dollar index. So I'm going to move over to the weekly chart of dollar index. And here you can see this is something which we have been following for quite some time. And on the daily chart, which we follow on daily videos, 107 is a pretty strong resistance that has been marked. And so far the market is actually not able to take that out, and it's been 1, 2, 3, 4, 5 weeks, and it just pulled back right into the 20-week moving average. Getting above 107 opens up the door to 108.65 and possibly even 110.77. okay, but on the daily chart, what do we see? Let's just go back here, and what we see is basically this market just moving lower with the possibility of ABCD down to 103.60, and it's just below its 38.2% retracement. There's a fairly good chance that this double top formation is in place. So double top here, double top here. Market really needs to close below the 99 for a much lower move in the US dollar, but looks like we might be actually moving in that direction ever since we filled in this gap at 106.39. Okay, now we will move over and take a look at the bond market through the eyes of US Treasury notes and bonds. So let's go and take a look at the 2-year Treasury note. So again, here the key pattern is that we have a possibly, I believe, a head and shoulder pattern in place. And we are likely moving in this ABCD pattern down to 3.9%. Of course, this also depends if this point, which we regard as the 78.6% retracement, is taken out to the upside, that's around 5%, then this scenario gets invalidated. But what we are seeing is something very similar to the daily chart on the dollar index. Although last 2 days we have seen some strength come in this, or yields moving higher, it's still below the 20-period moving average on the daily chart. So if it gets below the 4.69, so in other words 4.7, that will be below the 38.2% retracement and below the structure as well. So that could actually make this move accelerate to the downside. So this is what we are watching in the shorter term 2-year Treasury note. Now if we move on to the 10-year, this is the 10-year Treasury note futures daily chart. Here we have seen this bearish market symmetry. It was actually broken as the market had a fantastic day, but the last couple of days market seems to be finding resistance from this 200-day moving average, and it just pulled back right into this range. So really watching this information really carefully. On the longer term weekly chart, what we can see is that there is a possibility that just like what we were looking at in 2-year treasury note, this ABCD might be in play, and we can see this market jump to 114.15. Okay, so we are watching this one. There is still some work that needs to be done, and the most important one is this symmetry concept. So it needs to break above these highs, above the 20-week moving average. So basically, essentially, we are waiting for more signs of strength. But the daily chart a few days ago looked really good. If we take a look at the 30-year treasury bond futures, is also known as the long bond futures, we have these ABCDs coming right here, but the market went a little bit lower than the 61.8% retracement best seen on the daily chart. Let me just go back there. Here we go. Okay, so looks like we might have completed this point C, and we might be in CD leg higher, but we have to wait and see, get further information, because look at this market symmetry. This is where the market exactly went. We were looking for 118.22 to be broken to the upside, a break of this channel high, and then that would be much more constructive price action that probably we might have entered into the CD leg and travel higher. In other words, it yields lower. But what we have seen is a really good move to the upside since 25th of April. So that is actually constructive. But it just needs to overcome a fair amount of resistance to give us further confirmation. The good thing is that, look, the market has retraced for sure, but it is still above its 78.6% retracement. So we are really watching for this ABCD, which could see the yields move much lower, and it could still be in a bear market. Okay, now I'm not going to go into the details of gold and silver because I've done a separate video about it, and I would actually recommend that you go and watch that video. I'll try to put a link in the description for that, and of course right towards the end of this video as well, so you can pick on that one from if you're at the end of this video as well. Okay, so what we'll do is we'll start by taking a look at the foreign markets, and we'll start by taking a look at the Chinese market. So this is the ETF FXI. This is the iShares ETF, and we are looking at this daily chart, and what we can see is since the beginning of 2024, a nice move higher, which is actually getting stronger, and it is actually breaking out of these trend line resistance as well. It broke above the 38.2% retracement and is moving towards also broke above 61.8% retracement. Seems to be going right towards 3050, which is the swing high here, right at the 78.6% retracement. And if we just look at it on a weekly chart, it's a little bit more easier to see. You can see there's a real nice clean break of this trend line, and the other important thing to note is it is a higher low around here. If we just go back, maybe we might have to go back and see this on the monthly chart, but where the market actually went is right, it went right to the lows of 2009. So this market had been in a pretty strong down move, and of course it needs a little bit further confirmation, especially moving above these swing highs and then this swing high, and ideally get above the 20-week moving average as well for longer term confirmation. But this kind of move is encouraging, but we have seen this kind of a move in the past as well. So let's just take this, and if we just copy this, so this is the same concept of a market symmetry. So here we go, it goes right pretty much to the 200-week moving average as well, which is in this gray line. So getting above that would be actually a pretty good confirmation. And just a quick look on the monthly chart. So this is actually not a monthly chart, it's a quarterly chart. Each bar is 3 months, and we can see that's just gone back and tested, pretty much went towards this candle of October of 2008, and now a fair amount of consolidation in this one. We can also take a look at some of these bigger name Chinese stocks, which might also be listed on Hong Kong exchange as well, but they are also ADRs on New York Stock Exchange. So if we just take a look at BABA, for example, and I've done a video about BABA. I'll just quickly move over to the weekly chart. It's a little bit easier to see. Here we go. I recommend that you watch that video. When I did that video, it was around 4th of May. So around this week, probably this week, and the market has taken out this swing high of 88.54, or just closed right about there. So that's important thing to keep in mind. And one other thing just quickly want to point out is that BABA has formed this kind of a double bottom formation before, and similar kind of formation is just elongated in time. So just keep an eye on this. One of the things about BABA is, yes, it's been associated with the retail side of things, where suppliers list and people come and find factories for their products to get manufactured. That's the kind of how they started long time ago. But they do have some tech side as well, cloud, and now they seem to be getting into the artificial intelligence side of things as well. And I believe it is because of that AI component that we are seeing the kind of moves we are experiencing in BABA. So just keep an eye on this one. Another Chinese stock to take a look at is the Tencent Holdings. So here we go. This is the ADR. Again, you can see quite a nice break of this trend line right here. We have had a move like this before as well. So there we go. So ideally it should break out of this symmetry concept, get above the 200-week moving average, get above this consolidation area as well. So quite a lot of work that needs to be done. But if we just look at this stock, it looks stronger than the BABA stock, but look, fantastic run up. And then this is like looking at Mount Everest kind of a pattern formation. It was pretty steep to get up to here, and then there's just a rollover. So just keep that in mind. Okay, so just getting back to the daily chart now. What we are going to do is let's take a look at the German DAX index. And here we go. German DAX, what it is doing is right at its 1.272 expansion, and then we have seen a pullback, and this market is actually range bound. The chances are it is likely to get up to 191.60, which is the 1.618 expansion, because the price last Friday came and tested the low of Tuesday, 14th of May, but rejected lower prices and closed not exactly positive territory. But the key thing is it did reject lower prices, and the prices above the 20-day period moving average, and look where the 200 period moving average is really strong uptrend. And if we take a look at the FTSE 100, I think I picked up the wrong one. Oh, turned out it was the right one. Excuse me. So here, this is when the US markets were making the correction in early April. It came and touched 38.2% retracement, and it's been a very nice move higher. I believe it's completed a smaller ABCD, which we can take from here to here, thereabouts, and that's why we see some consolidation. But looks like the chances are it will get to around 85.66 and maybe even a bit higher. But it could consolidate for a few days. Momentum looks pretty strong, as it is above the moving averages. Okay, so now we are going to take a look at the sectors. So we'll just quickly have a look at XLF. Before we begin to take a look at the sectors and take a deep dive into the US stock indices, here is something that I want to point out, which is the kind of macro picture that I think we might be in, at least for the summer of 2024. And that picture looks for a US dollar moving lower, the bonds yields, US bonds yields moving lower all across the yield curve, And then the metals such as gold, silver, there's precious metals, neutral to higher. In fact, we have seen fantastic moves in silver last Friday, so it's definitely higher. And then risky assets such as stocks, because lower dollar should be helpful for stocks, and also commodities, and yields moving lower should also support assets. Risky assets is stocks higher, and commodities neutral to higher. So I should put a neutral here as well. Um, Commodities such as soft greens, etc., soybean, sugar, cocoa, um, coffee, etc. And so this is the kind of macro picture that is developing, and we're looking for further signs technically to get further confirmation. And these are the kind of signals that we are tracking on a daily basis. Further, if you stick around to the end of the video, we'll also go through these, or I'll just put them in the description so you can get these standard deviation levels. Let me actually bring it here as well. So these are standard deviation levels, or the ranges to be expected for the markets, such as the futures, S&P 500 E-mini futures, NASDAQ E-mini futures, Dow Jones E-mini futures, and Russell 2000. The top box is for the weekly ranges, and that is what to be expected for daily ranges for next Monday in the bottom half here. Okay, and I'm not going to go into the detail of the XLF, the patterns that we see. I just want to point out that if we just look at the XLF, which is the ETF for the financial, it's just been fantastic. It's just look at last Friday, it took these highs out, and looks like it's going and targeting these upward targets here. And on the weekly chart, it is also strong. Now there's another index called the KRE, which is the regional banking index. That is not as strong because these are smaller banks. And I'm not going to go into detail. Please watch the video. But these are also, the moves have been positive for a number of weeks, so that's good formation as well. But there's another index as well, which is BKX, KWB NASDAQ Banking Index. And if you look at this one, this is not the one which we follow, but this one looks pretty similar to the KRE, which is the smaller banks, regional banks. And when we look at the composition of XLF and this index, the composition is pretty different, and it does appear, I was trying to take a look at it on Yahoo Finance. Maybe the composition or maybe the data is a little bit outdated, but it looks like they also include some of the smaller regional banks, such as Silicon Valley Bank, for example, and perhaps that is the reason that this index is looking different, whereas XLF is going and making new all-time highs. This one has not even made its recovery high. So when investors who are picking their ETFs, please do the research, because depending upon what kind of index you are picking, the fund you are picking, you could have different results in terms of the performance, and of course there are costs associated as well. So we are not following this one because we follow KRE separately, which is a regional banking index, and then we follow the XLF, which also has the bigger banks such as JP Morgan, Goldman Sachs, American Express, and a few other things as well. Okay, now let's take a look at the housing by taking a look at the Philadelphia Housing Sector Index. So here we go. Here, something in this index, this is the daily chart. This is the weekly chart. What I wanted to point out is these points of inflection around here. So going back to 2018, for quite a long time, there is a fair amount of consolidation here, a move lower than a bull move higher, pretty much a double top. And of course we entered the 2020 March region when the COVID happened, and housing sector was hit in terms of construction, etc. But what is the other things that we are looking at that's post March 2020 is this index kind of topped in 10th of May 2021, and then just been sideways, and then there were a couple of retests or double top formation, in other words, towards the end of 2021 and beginning of 2022, and we had a bear market, and we also had a bear market in broader indices such as yeah, S&P 500, and that's when the whole inflation thing really started to kick off, and the Federal Reserve had to embark on a program to hike interest rates, really aggressively. But what we are seeing is that this index putting in a bottom around June of 2022, and then another bottom, which is an internal low. So this is, in my opinion, the orthodox low and an internal low around the month of September and October 2022, and that's where it started to rally, and we have also seen broad indices rally, and then right into then it actually took out these highs, so that's good. So that's a confirmation of a trend higher. Then it begins to top around July of 2023, retraces right into October of 2023, and then the bull move starts again, taking out these highs, and that's when the second leg of the kind of market that we are in broader indices also started. So another October, but October of 2023. Now this index from momentum perspective remains pretty strong because the price is still above 20-day moving average, although the little correction that we saw beginning of April, the price came and touched the 20 period weekly moving average, and this is where the 200-week moving average is. And where we are now is we're just making a recovery high so far. So just wanted to point out this kind of divergence, and we should really be watching for whether we are able to take these highs out so that the trend continues, or whether we go into a formation where we possibly might have a sideways trading market, and then we'll have to look for other signs. So right now it is just making a recovery high, whereas we'll soon see in some of the broader indices those have actually made new all-time highs as well. So they have taken these highs out, in other words. So just watching this one. This is the housing index, and then let's take a look at the XLY. This is the Spider Select Sector Fund for Consumer Discretionary. So here we go. This is the weekly chart for it, and again, what we see here is these are the kind of companies which are involved in consumer discretionary products, and we know that because of higher interest rates and the inflation, the consumer might be under pressure, and they might be highly selective in what they are shopping for. So discretionary items might be things like televisions, refrigerators, so a little bit expensive products which you might not really need on a essential daily basis, for example. So those kind of things. And here what we are seeing is that this market has not been able to take out the highs of November 2021 as of yet. And it's just right at the 78.6% retracement, but it has made some recovery, and it appears to be moving in this kind of a channel formation. So we could have a channel drawn like this, for example. So here, top of the channel around here. But the important thing is it's just right at the 61.8% retracement, and the key is that it should hold these lows around 170 level. So watching this one very, very carefully, how this is going to move over the course of next few trading weeks. And then also we are going to take a look at Dow Jones Transporters. Oops, not this one, sorry. DJ. Yeah, this is the one. So what we see is that transporters, they look better than the chart for the consumers index that we saw, the XLY, consumer discretionary. And here these are checking along in the sense that the price remains above the 200-week moving average and kind of touch and go with the 20 period moving average. So a fair amount of overlapping, and still below the highs seen in 1st of November 2021. And one of the reasons it could be because if the consumer discretionaries are not as strong, this means the consumer is the behavior is that maybe they're more conservative with their cash. So a lot of this could mean a lot of movement of physical products, for example. But the consumer might be spending more on experiences, so maybe going on restaurants and stuff like that. But they would also still want some products to be shipped to them, or they might be just spending more in the digital economy and not spending too much in physical goods. So that could be representative, but it still remains. This is the March lows. Then these are the September 2022 low, and these are 23rd of October 2023 lows. So these lows are higher, so they are all higher lows, but it's a massive trading range. So I don't really see it at this point as a signal for an impending top or something like that. It just means it's just chugging along with a pattern of higher lows, but it's not able to take out these highs yet. So a massive trading range, once it begins to close below these lows, yeah, that should be looked at, and we'll discuss more about this one later. Okay, and finally, in terms of sectors, we'll take a look at the Philadelphia Semiconductor sector SOX. Here we go. This is the weekly chart, and here this actually index includes stocks such as which are related to chips, for example, Intel, AMD, Nvidia, Taiwan Semiconductor, those sort of companies, along with some other tech-related companies. And this index is pretty important with respect to get a feeling on artificial intelligence, because a lot of these companies are developing chips for that purpose, or already have those chips. Nvidia, and they are a leader, and the other ones are trying to catch up, but they are also part of this index, for example. So AMD, Intel, for example, they might be far away, they might be near, I do not know, but they're part of this index. And what we see is it has completed a bigger ABCD around here, but the momentum is still strong. The price is above 20-week moving average, is above by quite a while above the 200 period moving average, and it also made a new all-time high. But what I want to point out is some of the indices have made new all-time highs, but this one yet needs to take out these highs. So just around here. So could it be just a retracement, or is it going to continue the trend? We'll be watching this. Now in this BC leg here, this is the top around 2021 November, and that's where we saw this expanding kind of triangle or megaphone kind of pattern. We don't really see this kind of pattern happening around here, but this also is distribution, in my opinion. So a move like this, a sharp move lower, move back up, maybe it begins to go in a trading range. That's like a sign for the next different kind of a phase in the market. Not enough information for that yet. We are just waiting to get further confirmation, but I think it's going to be a leading kind of an indicator for us, because the stock, there has been a lot of stocks which are artificial intelligence related. They have actually really moved the market a fair amount. So this one is an important one to watch, and we'll be watching this on a weekly basis at least. Okay, now we'll begin to take a look at the stock indices. Okay, so this one is going to be a little bit quicker because a lot of this we took a look at in our daily videos, so last Friday. And here, this is the weekly chart of the cash index, and the key thing to note is that the cash has actually taken out these highs. So it has made a new all-time high on the cash basis, and the chances are really short term is moving towards 53.94, and it can go and touch 56.56 as well, moving into this red box around here. And the really important thing to watch is that there's really nice trend line which is intact. So it's just in a move higher. Moving to the daily chart, here a number of things just to discuss, that we were really closely following this when this correction happened. We had different scenarios. We were looking for, maybe we could have a correction of ABCD magnitude lower, so maybe go to 38.2% retracement, 48.21. That did not happen. then we were thinking maybe if it retraces to about 61.8% retracement, or even 78.6% retracement, there is still a chance for a pullback to come here, maybe a little bit lower here, or possibly even retest these lows one more time. That scenario did not take place. So this is one of the things when we are doing the analysis, that if the market is giving us direct feedback, this is direct market feedback, we have to follow what the market is telling us. So those scenarios went out of, we were no longer following those scenarios because the market was pretty strong. Now, just moving to this Dow Jones Industrial Average Index. This is the timing model that we have been following. It has a pretty decent record of calling in tops. The recent one being a minor top around the end of February, so 23rd. And then where the market just went sideways, essentially a little bit lower and sideways. And then it gave us a window of around 1st of April, 2nd of April to 4th of April. And then we saw a pretty decent move. And the way it works with timings, we have to give it about 2 to 3 trading days either side. It is telling us of another really key date, 24th of May to 29th of May 2024. This is the timing that we're working for the correction to complete. Now, we have to give 2 to 3 trading days either side. So this is something which we'll still be watching, because per this timing model, we are still in that corrective kind of window, and it's possible that we might get 2 to 3 trading days of pullback. That possibility is still there. So we'll be really carefully watching this time window. We were watching for a low to come in, either a newer low or low around the pretty much the bottom, or between 61.8 to 78.6% retracement of this move lower on the S&P 500, for example, or even Dow Jones Index cash indices. That scenario did not materialize. So what it means is that, because it's also an election year, the chances are that the macro that we are looking at for the summer, this has actually kicked in, and the low came in a little bit earlier. So rather than what we were expecting would happen towards the end of May and beginning of June, happened actually a little bit earlier in terms of the low coming in. So the chances are we are going to rally throughout this summer of 2024, right towards the end of September. And then, of course, we have the big event of the elections in the United States. Okay, so that's the kind of macro we are working with. Now, let's take a look at the futures. So this is the S&P 500 futures daily chart. One of the big differences that I want to point out is we just saw the S&P 500 cash, and it was above this highs, and in the future is just testing these highs. So that's a little bit of an anomaly. And the cash might just get to 1.272, but the futures have a way to go. So this is something which we are watching. And then this is the weekly chart. On the weekly chart, we had some higher targets. This one on the weekly chart is 5570, which is the 1.618 expansion. So this is really interesting thing happening between the cash and the futures. Now let's take a look at NDX. This is the NASDAQ 100 cash. The cash moved above these highs. Let's take a quick look on the daily chart. It moved above the highs of March, so that's really interesting. And if we take a look at NQ, we don't fully see the same picture. So there we go. The possibility on the daily chart is 19121. We'll just take a look on the weekly chart, but let's have a quick look on the cash. Here we go. And are we at the 1.272, or we might be? We are not there yet, but we have clearly taken out these highs. But in the Qs, we are just around the highs. We haven't done that. And if we take a look on the weekly chart, here we go. Yep. So we can see that strong looking candle, really strong looking candle. And we are certainly stronger on the cash basis. We have seen that in SPX and the ES as well. So the next 1.618 expansion comes around 20,800. This has been a target for quite some time, and if the market remains as strong as it is, been week one, let's start from here. Week one, week two, week three, week four. It's been strong for a month. Pretty strong market. Chances are it's gonna go and hit that. We have and that could be a pretty strong level, because if we have a big ABCD completing around 20,700 roughly, and then right above that we have the 1.618 expansion. So it'll be really interesting if the market gets there, what's going to happen. And if we just take a look at the QQQs, this is the ETF. Yep, it's also taking out these highs, and yeah, of course, just like the futures, we have a higher target as well. So really important how the market is going to trade over the course of next two trading weeks, because of the timing model which is coming up that window, and then also the number of patterns formation as well. So really interesting juncture we are at. And then let's take a look at the YM. So the YM hasn't done that. It needs to get above towards the highs of this one. We do have higher targets around 41, roughly 42,000, where we have the 1.618 expansion of this entire swing, this high to this low around here. And then we have the smaller one, which is of this one. And let me actually also bring 1.272, because that's a shorter term target. So 41,158 to 42,154, but really this 42,000 is kind of a magnet. So we'll see how the market will get there. And if we just look at the cash market for this one, we can see the cash has actually taken out these highs. So this is really interesting. It might just be happening. I don't know exactly why it might be happening, but it could be towards the expectation of the interest rates. Maybe the market participants are thinking that the interest rates in the future might move direction might be lower. This is kind of the macro we are anticipating. So maybe cash gets priced a little bit higher. I don't know if somebody knows exactly the reason, because I'm trying to search for one. Please do put that in the comments. Well, it'll be really, really appreciated. Then last but not least, we'll take a look at the Russell 2000, and this is the one which is really interesting, because this has not taken out these highs yet, and it is, I believe, right at the 78.6% retracement, closing below that. If it is able to take these highs out, then on the shorter term, 2232 to 2318 is where you can go. And right here we'll also have this ABCD pattern completing. The interesting thing is that this is what we discussed. It found support from the 38.2% retracement and formed like a double bottom pattern, but really needs to get above this swing high for that to confirm, and then we'll have a confirmed ABCD in my opinion. And if we just take a look at this on the daily chart, here we go. Yeah, it's just 2 days consolidating inside bars within this candle from 78.6% retracement, closing below that. So some work that needs to be done so that it's able to get above the swing high and move higher. So interesting formation for the Russell 2000. Okay guys, now we are going to do something a little bit interesting. Just wanted to throw this one out, and we'll do this by taking a look at the Dow Jones transportation average. So this is the Dow Jones Industrials transportation, and then what we are going to do is we are going to go back in time. So we will go back to February of 1994. There we go. So this is February of 1994, and we can see that the market put in a top on the 1st of February 1994 for the Dow Jones transportation average, right? Then it had a pretty dramatic kind of breakdown or pullback lower, and in fact it went into a bear market. Now the thing that I want to point out is something like this. that if we just look at this advance right here, does this market actually bottom in October of 1990? There's something about October. We have seen October 2022, the market put in a low in 2022 recent market price action, and then also again a year later, October 2023. And a lot of that has to do with the expectation for the interest rates, right? So we'll just get to that. So there is a phase between the October of 1991 and the October of 1990 till February 1992. So we'll just try to draw that here. So this is around October of here we go, 1990, and then we'll move to the January 1990, February 1992. So this is the kind of a phase in here, and then the market goes into a bear phase, and then there's another phase that starts from pretty much August, September of 1992, and it lasts till 1993, February 1993. So around here, but in fact on the transporters it was a little bit higher, so April of 1993. So what was happening around here was it's actually easier to see this on a weekly chart, but I'll just try to do it on a daily chart as well. Let's see if it is able to, if it'll just let us do that. So we'll just put in the 2-year treasury note around here. So this is the yellow line is the 2-year treasury yields. All right, this is not in price format, it's in yields. So when the yield is moving lower, the price will be moving higher. So what I wanted to point out is that on the 2-year treasury note, there was an expectation that the Federal Reserve will be looking to lower the interest rates, right? And because of that, the 2-year treasury note, the yields began to decline, but it still took a while for the market to bottom in October of 1990. And then this phase, which I mentioned, which is from October of 1990 to February 1992, this is the discounting phase, where the market was discounting the fact that the interest rate will be going lower, so the market started to move higher, right? So just going back to the original quote coming from Sir John Templeton, that usually, well, the bull markets actually start when the economic conditions are pretty bad. So I don't know exactly what the conditions were back then, but there was, you can see the Dow Jones transportation was not in the best of its conditions, that it was not at all new all-time highs, for example. So around here, that's when the discounting phase started because of the future expectation for the interest rates to move lower. This kick started this move higher. And then as we began to move into this next phase, which is pretty much around, you can say, which lasted till April of 1994. This is the kind of next phase in this market when, which could be thought of as a transition phase. So if you look at this one, it lasted pretty long. This one is still going on, but here it just kind of ended. We went into a correction, and then finally a bigger correction started in 1994, and that was the top for the Dow Jones Industrial Transportation. And this last phase could also be thought of the I'm going to make it a little bit smaller, capital goods phase, right? Oops, if it lets me write it, capital goods phase. So this is what I'm describing is the Dow Russell theory, the transportations, but I just want to make a distinction and try to then compare with the current period that we are in. So this is the discounting phase. Then this is the phase where the market was transitioning, especially the broader market, and we'll just look at that. And then this is where this move ended with the capital goods phase, and this was the top in the Dow Jones Industrial Transportation. And now if we just go and put in SPX alongside, right? Okay, so this cyan color or blue color line is the S&P 500 back in the 1990s. So you can see that it also formed a low in October 1990, and then it kind of formed a top around January to February period of 1992. So again, it's been just following along, chugging along nicely. Dow Transportation and the S&P 500 index, the yields are moving lower. These two stock indices are moving higher. So the transportations are, doing good. People are buying goods, for example. There's a lot of movement of those goods, so transportations are doing well. And it's all based on the fact that a discounting phase, that the interest rates are likely to move lower and there's a move higher in these equities. Then if you look at this, is more evident rather than in transportation, is more evident in the actual S&P 500 index. So if we just look at the angle at which it ascended, it's not the kind of same angle that we have in transportation, and it's not the same kind of angle that we have here for the broader index like this. So it was more of a transition phase where things were chugging along nicely. The market went through its phases, moved higher, moved lower, correction, move higher, move lower. This is how typically bull markets move. And then that's where this phase ended and it went into a corrective phase. And then the last phase is this one. On the broader index, we can see it like this. Boom. And this is where the transportation also put in a top. So this is the capital goods phase. And then the transportations, they went into a prolonged bear market or bear move or correction, however you want to put it. And so did the broader index. And the broader index kind of bottomed around the 22nd of June. And then they started to recover higher, forming another internal low, which coincided with also the low of the Dow Jones Transportations. But you can see the indices were doing something a little bit different, whereas the Dow Jones Industrial, the transportation, it just kept on doing its correction lower. So maybe it did it in an ABCD fashion, just looking at it, and pretty much lo and behold, it came very close to that. So this ABCD one-to-one price projection works every time. Well, not every time, but a lot of situations. So now, based on this, we just try to put it towards where we are now in our current markets. Here, there is, in my opinion, October 2022, October 2023, the bullish moves that we have seen in the broader indices. Here, these are in the discounting phases because there's an anticipation for the Federal Reserve to lower the interest rates, but it hasn't happened yet. But there is some sort of talk about it, but there's a inflation dependent, there's a talk about that. There will come a time, and usually that is when the economic conditions are actually worsening, that a campaign of lower interest rates starts to follow, right? So the interesting part will be where we might be in that phase right now, right? So we'll just try to understand that. It's a little bit not that much easy to see these because look, the 2-year treasury note is not in line, so I'm just gonna get rid of that, or actually just hide it for now. So here we can see transportations on top, and we see the S&P 500 in this cyan line. So they seem to be in a fashion that they were kind of forming a bottom in October 2023. Then if we move to the bottom in October of 2022, so these are in line. But now the S&P 500 is actually making new highs, but the transports are not. So this is something that we need to pay attention to, and whether this condition is actually gonna last longer, or whether what we talked about, the discounting phase, we are actually moving out of that, moving into a transitioning phase, or whether it's something else which is going on. So we'll be paying close attention to that, or if there's going to be further expectations that the interest rate scenario might begin to change, and we begin to see the interest rates actually happen, then how this index is going to work, because it did top around July of 2023, but it's also been strong as well, in the sense that we talked about that these lows are higher of October 2022, October 2023. So the transportations, we need to watch clearly, and it's not the same economy as the 1994 as well. So I'm not saying that's going to be the exact same kind of a signal, but if we begin to also see this index move higher, it means that we are perhaps moving into a transition phase from the discount phase, for example, if this bull market is likely to continue. So we'll just be paying really close attention to the Dow Jones Transportation Index as a kind of a guide, along with the housing index and the SOX and the financial index as well. So really watching this one closely, and of course I will keep you guys updated with this. Apologies, just looked at the time, it's a really long video, but we had a lot of things to cover as well, and I've made an attempt to provide quite a lot of things, because there are many things happening in the markets, there are different kind of signals, and we need to look at quite a lot of information to be able to make a decision what the market is likely to do next. So thank you very much for watching the video. If you like our analysis, please do subscribe to the channel as well. If you found this video of educational value, please give it a thumbs up. Good luck, good trading, and speak to you guys soon.